What you could say that about baseball, I don't think it's captured the sort of imagination.
Can you guys hear me?
Yeah, Peter, we got you. I can hear you.
All right.
Yeah, we'll be starting in just a couple minutes, and welcome.
Thanks.
A
Thanks.
okay.
Yeah, thank you. Thank you for accommodating.
All right, buddy.
You were at Foxborough. I found the date. I knew a pretty good memory actually. September 5th, 2008 was when it was though. What I remember most vividly about
It was John Bon Jovi getting off the helicopter, coming over and saying, "Hey, boss."
that was part of it. For me,
Someone's recording. I could hear. Okay, hello, Warriors. Big day today. CPI. You know, it's a big number when Peter wants to be around for it. Peter Bookfire, we're going to start with him. Peter, welcome to F.A.C.E at this
Thanks, Dale.
time. All right, so I'm thinking that maybe you have 100 bigs on into the CPI number. You know what bigs are, right?
Biggs, a bet of some sort.
No, it's full-size S&P contracts.
Oh, right, the bigs. Okay.
Yeah, no
Yeah.
minis or anything. So uh, let's just start with, we have a couple of things today. Any view on ECB?
ECB will do nothing. They already have real rates down to zero, so there's really not much more they're going to do right now. Uh, they feel comfortable that inflation, yeah, came down to two, but will stay at two, and we'll see. But they're going to do nothing. This will be the first uneventful meeting that they've had in a while, and obviously all eyes on the Fed next week.
Okay, are you positive the euro still bearish the dollar?
I am still bearish the dollar.
Okay.
I think considering the challenges that Europe is always having, most recently with France, that the euro continues to trade as well as it does, I think is just very interesting. And It's not necessarily a bull story on Europe, even though you could make one in the sense of these countries finally realize
Yeah.
the debt and deficit messes that they're all in, and the regulatory choking that these economies have experienced. That's the positive side, but it's still hanging in there.
Okay. Dollar attempting to bounce this week. All right. Let's get to the big kahuna. I find it a little bit unusual for a macro guy like you to be really focused on one number, so it must mean a lot for you. Besides the headline number, what are you going to be looking for in this report?
I mean the core for sure. There's been this belief that the Fed has a green light to cut rates as much as it wants to respond to the weakness in the labor market. And if there's one thing that can limit their ability to do so, would be still elevated inflation, which is what I think
Okay.
we have. I think the Fed no doubt will cut next week, and I'm sure they'll cut one or two times through the end of the year. But the question is, are they going to be able to really get away with much more? And I still think inflation is going to be hovering around this 3% level. And the market's pricing in what 100 basis points of cuts to the end
Yes.
of next year. So if inflation stays at 3, I think the bond market's going to be wrong in that they're cutting that much, unless the Fed decides to do what the ECB did and just take real rates back to zero again. But then that risks reflaring inflation again, and you can just see the repeat and the steps that took us to the 1970s happening again. Not that inflation is going to flare to 9% again, but I just feel like there's this complacency with inflation in the sense that, yes, it's fallen down. The services side should continue to decelerate because of the slowdown in rents. But there's one thing to have inflation come down, and there's another thing to have it stay down. And I don't think that
Exactly.
there's real clear evidence that it's going to stay down. But just an amazing level of um, complacency with that inflation side. I understand the concerns about the economy. I agree with them. I understand the concerns about the labor market. The question, though, is are rate cuts the right fix for generating faster growth? I actually see the beneficiary of rate cuts more so the government than the private sector. When you think about the private
Okay.
sector, the housing
They,
market will then. Am I
yeah,
going
I
off on a
mean,
tangent here?
no, it's all right, buddy. It's I have been reading things about how lower rates a lot of people aren't happy about because they were happy sitting with 4%, 4.5%. So, the savers or the people that don't want to go out there and take risks um, are now going to be forced to do something else. Is that the constituency that doesn't want to see lower rates?
For sure. And what's been a major support to the U.S. economy, it's been upper income spending.
Right.
So if you all of a sudden clip away at upper income spending, then you have to believe that we're going to offset it with other things. Maybe we will. Maybe housing gets a lift here, but a lot of that obviously will depend on where long-term interest rates go. We've seen nice relief here on mortgage rates, but will it stay the case?
Yeah.
Is this just a bear market rally in treasuries with the drop in yields, or can we keep mortgage rates down? We'll have to see. But there's this very superficial belief that high rates bad, low rates good, and if low rates are good, even lower rates are better. Well, we had zero rates for 7 years
Yeah.
under Bernanke and Yellen, and the economy couldn't grow more than 2%. I think we've proven that ultra low rates no longer become stimulative. So the question is where is that sort of magic line? And I'm not smart enough to know, but I do want to point out that those who think that just slashing interest rates are going to be just this salve to the economy, I think history over the past 20 years has proven that that's not necessarily the case. I believe proper monetary policy should have the Fed funds rate above the rate of inflation to an extent. I don't believe in the beneficial economic impact. I don't think there is a beneficial economic impact to having zero or negative real rates. And I think we've proven that already. So my point is that if, and I emphasize if inflation stays around this 3%, I don't think the Fed has that many rate cuts to do. And if they do more than just a few, I don't think that that's going to necessarily help the economy. And one last point on this. The AI infrastructure data center build out
Yeah.
is obviously enormous. And if, and no, it's not a if, it's when that spend slows down, and I don't know when, but when that spend slows down, no amount of rate cuts are going to stop that process from happening, as no amount of rate cuts in 2000 to 2002 was able to mitigate the overbuild of fiber optics.
Great analogy to that. A lot of people after the first several months of the year when overseas markets were outperforming, why isn't that happening now? I'm showing the DAX right now. S&Ps have made successive new all-time highs for weeks now without the DAX. What's the shift of Germany not outperforming the US right now?
Well, year to date, the DAX is still up 19% in euros. It's up 34% in dollars.
Okay,
The Spanish IBEX is up 49% this year in dollars, up 32% in euros. Even the Italian stock market is up 24% in euros and 40% in dollars. So, yeah, the US is playing some catch up as the AI tech
okay,
trade has gotten a second wind here, but international markets have still had a tremendous year. I mean, the Hang Seng is up 30%.
right,
The Hang Seng has outperformed the S&P since December 2023. Whenever you
okay.
hear someone tell you that some market is uninvestable, that's the time to invest, and that is clearly the case with China. And actually, at the end of
Mm,
2023, my call for 24 was that the Hang Seng would outperform the S&P last year. It didn't, but over a 2-year time frame, it has.
okay. Great. I know you've been long gold and silver forever. Congratulations. Are you doing any lightening up? You still feel you always would say there's a long runway. Obviously, we've gone down the runway. Still a long runway?
I think the runway is still there, but obviously the easier money's been made. I still think gold trades to 5,000-ish and
Okay.
probably more on an overshoot. Silver, even at $42, in nominal terms, is still well below its 2011 and 1980 peak of 50. On a real basis, it's about half of what the inflation adjusted price would be. And its ratio to gold, if it just went back
Yeah.
to its 50-year average, would see silver at around 55, 56. So still think there's a lot of upside in silver and platinum. Platinum for decades traded above the price
At
of gold.
premium. Yeah.
Now it's a third of the price of gold. So we're still pretty bullish on platinum as well.
Okay. Um, so XAU, gold silver ratio, do you have numbers where you think it targets reversion to the mean would be what, about 60 or 50? I remember 40,
Yeah,
50.
55 in silver.
Okay. And where would that put silver at $70?
No, no, no. If you went back to the average gold silver ratio of about 60 times ish,
Okay.
you're talking about mid 50 silver. But again, these are nominal numbers, and silver when it goes, it's going to overshoot that 60. Um, and the gold miners have had a nice run here, and to me,
Oh yeah.
they're still attractive as well, even though some of them, like Agnico, we took a
Yeah, I have
small amount of
those.
money off the table. We were long that, but that's that stock has tripled. So, um,
Yeah, look
but
at Newmont,
overall,
look
you know,
at GDX. They've gotten parabolic.
yeah. So from a short-term perspective, I wouldn't be surprised if any day, and maybe even begins today, that we're going to get a pullback in the metals. Particularly the miners that have just, our size, and these are pretty stretched. So I'm expecting a correction at any moment, but I'm still pretty positive. I mean, now you've had, for the last 3 years, most of the buying has been central banks. Now you're
Right.
finally getting some catch up within the ETFs. Still below its highs, but you're starting to get some retail participation, which tells me that maybe in the short term, the move is probably going to take a rest.
Yeah, the juniors have doubled. Almost every silver stock has doubled. There's Agnico Eagle. No, this is Majestic, but it's doubled from 5 as well. So it's been a big trade in the miners. Let's go to one of the most hated commodities that I keep trying to hate, but the formation in the market, when I look at it, maybe look at a USO. Do you have an opinion on crude with the whole world bearish?
I am very, very bullish on oil prices.
Okay.
Um, I
You're
look
the
at
you're a contrarian on this now.
I'm very bullish. I think it's dirt cheap in nominal terms, and it's dirt cheap in real terms. I look at a couple of things. So we've had OPEC that has taken back fully the 2.2 million barrel per day cut that they implemented after COVID. Now they're in the process of slowly beginning to take back, I think it's 1.65 million barrels. But the first tranche was only about 130-ish thousand barrels, which was smaller than the previous cuts. But even with this, it's being seen that inventories are still tight and that these quota increases are really mostly just catching up to current production. And you look at U.S. oil production, you have rig counts that are just off the lowest level since, I think, September 2021. You look at overall U.S. oil production, and it looks like it's peaking out. Geologically, I keep reading stories about some of the shale basins that are rolling over. So,
Yeah,
and oil can't break below 60. So
right.
to me, this we're setting ourselves up for a bull run. And to your point earlier, everyone is bearish. I'm hugely bullish, and
Okay.
we're long a few of the oil stocks
Okay. Because
and drillers. We're along with
I
one driller.
I see confirmed highs, which is not bearish, when we had the bombing of Iran by Israel and us. And this is about a 61% pullback on this. And geo-wise, is there a peace deal between Iran and Israel? I think they're still at war, and how public opinion is hugely negative Israel. I'm expecting Iran to strike first this time, and I think it's going to happen. And this time, the world will cheer until the count I get on oil. If we have this was one heck of a wave. That if we have 1.618 from here, you're talking 90, $100 oil. Is that in the cards? Just like no one thought we'd see, $3,800 gold a year ago, that we could see another, maybe that could be the nail in the coffin. I mean, there's so many things working against the consumer right now, and tariffs haven't really completely kicked in. That if they have to start paying a lot more for gasoline and energy, just like a lot of other recessions, have always been preceded by some type of oil shock.
Yeah, I mean, I don't. Geopolitics is always a tough card to sort of play when it comes
Yeah,
to oil. The responses to them with oil usually end up being only a couple of days to a couple of weeks, and we saw that
yeah,
with Israel's bombing.
right.
So I don't know if it's that. I just think that the markets are tighter, and it
Okay,
doesn't take much of an imbalance to have a price move. And
okay,
when you look at over the last 20 25 years, about 85% of non-OPEC oil production around the world has come from US shale. And US shale should be something that we all watch. The US rig count is something we should be watching. Now, maybe there could be some offsets like Guyana, Brazil, whatever, but losing US shale in terms of its contributor to global oil production, I think is a really big deal. And the markets don't agree with me because oil is only at 62, $63. But
Right.
I think on a risk reward basis, it's looking really damn attractive here. And
Oh,
we're
okay.
expressing that belief.
Are you expressing your belief in natural gas stocks too? I've turned positive on natural gas because when you look at it, Peter, this was the bottom last year, and this has just been looks like a retrace move, and we could have another move to the upside. Could that be, one of the reasons this is going to be a bridge to power the AI centers before we have nuclear?
Yeah,
They
I'm
Go
pretty
ahead.
bullish on gas too, along EQT, and have been
Okay.
for a couple of years now, and some of the pipeline companies. So yeah, I very positive on the supply demand situation there. But obviously, there's no question there's robust supply around the world. This is not um, a market that is sort of as tight, I believe, as gas as oil, but
Okay.
the demand side is certainly clear.
Okay. And natural gas is used in fertilizer, and I know you trade those kind of stocks, and I believe that we finally had a turn in the corn market. That's a weekly, but you look at the daily, it's had a nice move off the lows. Beans have had a nice move off the lows. Wheat is the only thing really dragging here. Natural gas used for fertilizer. Is that kind of a trade you can marry together, grains and nat gas?
Yeah, I mean, well, gas being a feedstock for the production
Right,
fertilizers. I mean,
right.
we're long the fertilizers too. I mean, um, they seem to be bottoming out too. I mean, it's interesting. Like corn and soybean prices are still pretty low, with corn around 4,
Comparatively,
soybeans
yeah,
around 10. Right.
yeah.
Yeah, I
From
remember
where
the
they
days
were
when.
at the invasion, they were $15.
Yeah, yeah. So, but on the other hand, the demand for fertilizers has been pretty robust, and fertilizer prices have actually hung in pretty well. Uh, but I still think that there's when you can buy a commodity stock at sort of the bottom of a cycle, where that company is profitable at the bottom of the cycle and even generating free cash flow at the bottom of the cycle and pays a good dividend, you don't have to get your timing right because you at least get paid to wait. And Mosaic and Nutrien, as examples, um,
Yeah,
fit that criteria. So I'm not smart enough to know when corn and soybean prices are going to rally, even though fertilizers go into other things too. Uh, I think you're sort of protected by their cash flow and their dividends. And when that cycle does turn, these companies are very well positioned to take advantage of that.
yeah. So you talk about inflation being sticky now. Can you imagine if we had a bull market in depressed commodities that were actually contributing to inflation not going up at a real fast clip? And that would be oil and grains. We get bull moves in that. That could take the inflation way above the targets, don't you
Yeah, that
think?
would certainly complicate the Fed's job, no doubt. I mean, there's one thing that I've been saying for the past year is that, after being on the inflation call, is acknowledging that inflation is certainly decelerating. I'm just not of the belief that it goes from 2 to 9 magically back to 2 and just stays at 2. I
Yeah,
think we're in a world of inflation volatility and with ups and downs, but the downs will be at a higher level than pre-COVID. And it doesn't sound like a big difference between 2 and 3% inflation, but it
yeah.
actually is a big difference in terms of where,
30%.
yeah, and also a big difference if you compound that, what it means for interest rates. Now, historically, 3% wasn't that high. We had decades of 3%. We would have been fortunate enough. But coming off 1 to 2% inflation and interest rates coming off many years of zero, it's still a different world. And just ask any private equity person who's dealing with
Trying to
elevated
cash
interest
in.
rates and can't
Abs-
sell companies, or
Yeah,
mortgage rates that have doubled in addition to home prices going up 50%. So the absolute level of interest rates isn't that high. It's just it is very high relative to the zero in the 15 years prior.
I noticed, Peter, over the last few days with the market recovering, the financials aren't. And they were the lead, part of the leadership besides things like NVIDIA, AI, and Mag 7s, and they took a pretty good hit. Would you avoid financials now with what's going on?
Well, we have to break out financials because on one hand, insurance companies in that financial group, they don't want lower interest rates because it inhibits their investment opportunities in fixed income, for example.
Okay.
Banks, on the other hand, they like the steeper yield curve, so it could be good for them. But on the other hand, if rates are falling, if the Fed's cutting because the economy is rolling over, well, then that puts a threat to their loan book, both households and businesses. So it's a mixed bag when it comes to financials, and I think you have to split up the word financials in terms of the type of business you're going to invest in it. On the other hand, asset managers that are within financials are, the stock market's a record high, so they're benefiting. So you have to slice and dice that group.
Okay. So will a hot number end up being a big disappointment? Because
Today
some
will be
people,
because we're not, we know we've been doing this long enough, Dale, that we know sometimes a market response is more positioning than
yes,
a data point itself. And the positioning going into today's number is you've had this dramatic rally in treasuries across the yield
yeah,
curve and the
yeah.
stock market trading at highs. So you're not well positioned for a hotter number today. Now, can we get a number that's in line or less? Yeah, sure. And that would just confirm the move we've seen. But you do have the potential for a bit of a reversal today if it is hot, again, because of where we're positioned and the moves we've made going into the number.
Okay. A lot of people are talking, we'll wrap it with this, Peter. A lot of people are talking about a 50 basis point cut by the Fed. It just doesn't seem like it's Powell style. Plus, it'd be another admission of being late again.
He's
Do you
he's
think?
not doing it. And what's the
Okay.
point of 50 if inflation's still around 3? I understand people's worried about the labor market, but are we gonna do exactly what Powell did in 2020 and
Yeah, that's what
2021
I mean.
was focused so much on the labor market that he kept policy way too easy for too long, only to have inflation. The key to strong economic growth, the foundation is having stable prices. You can't have a healthy labor market unless you have stable prices. And people have forgotten about that. And those calling for 50, and I heard somebody the other day who's running for Fed chair, who thinks maybe they should even cut
Yeah,
75. Now have we ever had easier financial conditions? Well, maybe, but not too far away with credit spread so tight, with the S&P
yeah,
500 trading at multiples that were seen in 1929 and year 2000. The Fed
yeah.
has an asymmetry when it comes to financial conditions. They're very easy to cut when conditions are tight, and then when conditions are as easy as can be, like they are now, they ignore it. So it would be silly to cut more than 25. Cut 25. You can always you only it's only 6 weeks later. There's another meeting. You can cut
Right.
then. So you want to just goose the stock market with 50 or 75, and then have a repeat of 1999 again?
Yeah. So the presser is really going to be the thing. Say he does a quarter and then says, and now we're data dependent again. We're going to watch
I mean,
instead of
as
being
as a
real dovish.
as a prudent central banker who needs to risk manage policy, yeah,
Yeah.
it would be the smart thing to do. Cut 25 and say, okay, well, we have 6 weeks ahead of us of absorbing what's out there, and we'll do so. I don't understand these central bankers that pre-commit, like Waller, like, yeah, we're going to cut so many times. Like, really?
Well, they're
Your crystal ball.
auditioning.
Well, of course they're auditioning, but they
Yeah.
also think that their crystal ball is shinier than everyone else's.
Yeah. So definitely, we don't want the Fed to be run by the administration, do we? Or we'll end up with Turkey. We'll end up like Turkey, like what Erdogan did.
Yeah, now I understand when they can chime in and say they can give their opinion on the economy and where rates should be, but when you start to say that I want rates lower because we need to ease the interest burden for the U.S. government,
Yeah.
I wasn't aware that that was one of the Fed's mandates.
Yeah. Peter, thanks so much. Good luck on the number.
Thank you, Dale.
And appreciate you, all your insights again, Peter. It was a great interview.
Yeah, I appreciate having me and accommodating the time schedule.
All right, Peter Bookvar, everyone, follow him. Go to his website. On X, it's at P Bookvar. You got to know what he's doing. And here we are with the team.
Thanks,
And
Peter.
there's Blake. Thanks, Peter. Good morning,
Hey,
Blake.
hey, good morning, Coach. I know you've been talking. We just had the ECB meet, and the euro dropped pretty quick, and I thought the 2026 growth forecast is what really kind of set it on fire to the downside. Ryan, what's your initial thoughts here? I know only have 3 minutes till the CPI comes out, but what are your thoughts on the ECB?
Pretty much as expected. No real change to the forecasts at all. Core forecasts for CPI unchanged. The only thing I did pick out, and we're just questioning this with Michael Brown at the moment in the statement, the line on the wires said that the ECB are going to decide rates based on core inflation. So that is one of their little accounting switches where they take the focus off of headline inflation and move it to core inflation, which is staying sticky. It's bullish on the margin, and dovish on the margin.
Yeah, so you were mentioning this in the chat room. People were like, "Oh, the ECB, the euro's moving," and you've been making these comments, obviously, in the chat room where we're all discussing it. It's real interesting how you got that plunge lower in the euro right to that level. And by the way, just so you guys can all see this, because I posted in the chat room too, the dollar index actually hit the 618 retracement just about, and then reversed right after that headline. So thank you, Ryan. K-Man, did you have anything you wanted to add to this before we hit CPI here?
I mean, everything can change. And by the way, I don't see this core thing, and I'm not sure whether it's Bloomberg or so, but I don't see this core thing in there, because if it would have been core, I think it would have been rather a bit bullish for the euro and expectations for the ECB. But I fail to see it in the statement. Maybe I'm blind.
So, Ryan, where did you get that from?
That was on Bloomberg. That was on the wires dropping that.
Oh, okay, and maybe that's why, like you said, K-Man, it wasn't originally seen, but now that everybody's going, wait a second, Ryan's just way smarter than everybody else and a little quicker, I have to admit. He's really good at actually
Or
disseminating
Bloomberg
all
too
this.
quick.
Yeah, a little too quick, but he finds this stuff before everybody else, and so now you're seeing the euro reverse higher, which is
Bloomberg too
interesting.
quick to assume stuff. I don't see it in the
Yeah.
statement, the core inflation thing.
Yeah.
Oh, well, let's get back to it after CPI.
Yeah, let's do it. We got CPI coming out in just a few seconds, and again, if you guys were not around for that, you guys know where to find us, and we're in the chat rooms going crazy. So you should be taking advantage of that sale that we have going on. Pulling up data flash. Remember, we came off of a weak producer prices, but CPI is a different animal, and that's coming out here in 1 second. So here we go, guys. Get ready.
In line with expectations. Core headline CPI 2.9. It's gone up. Core unchanged 3.1.
The
So
euro's
not-
all over the map. I mean,
Month on month,
yeah.
a tick higher. Month on month, a tick higher, but all the rest unchanged.
okay. Now the euro just completely reversed higher. Holy shit. What happened with
Earnings are a bit soft.
Whoa, what's going on
claims
here?
Jobless claims jumped 263, although continued claims come down. So CPI sticky, not like PPI yesterday. Wages have come down as well year on year.
Woo.
Jobless claims gone up to 263, though continued have come down. Go on, someone else can sort that mess out.
Wow. All right. Well, I got limited out on my euro on the long side. It was actually for a very small loss, but I didn't expect that to happen. So, wow. I'm gonna have to get back in this damn thing. Holy crap. What a move. What a move here. And look at the dollar index just absolutely crapping the bed. Like I said, I'm gonna have to how to get that back in. I forgot I had that order out. Holy moly. Well, that's something. What do you make of all this, Ryan? Now we have a few minutes because obviously Peter's not here. So
It's I don't know. We had soft PPI yesterday, a big surprise downward move,
look at
and
yields.
and the dollar blipped and then rallied higher and continued rallying. And now we've had hot CPI data and the dollar's coming off. Yeah, kind of me confused.
All
Yeah,
right.
jobless are a little weak. But as I was saying on the floor show and in the room this morning, it is very possible that the more longer term or bigger fish have just been waiting at the start of September to start new positions until we are over this inflation hump. So there is perhaps some light at the end of the tunnel that we will get a move after all.
All right. Well, so that's maybe what's weighing on this dollar to the downside. Like I said, I had to re-enter back in. I'm like a doofus. I don't know why I had my orders so close. Anyway, um,
In the
yeah,
meantime, though, we are still in ranges.
we are still in ranges. I mean, you know, the euro, like if you look at the euro, we did, you know, press that trend line support, and now we're bouncing off of it. Probably trade back into the, mid 117s and just sit in this wedge as we get ready for everything that's happening next week with the jobs report. So what an interesting move today, and a lot of big moves in the market. Let's talk a little bit, and since like I said, we're not rushed now for Peter, since he was here earlier. And guys, that was just a one-off. Peter had a scheduling conflict, so he had to be available at the bottom of the hour. So that's why Dale had him come in early. So appreciate you guys waiting around and sticking around for all that. Now, Ryan, what were your takeaways? Well, actually, let me go to K-Man. No offense, Ryan. You were on top of all this really early on, so kudos to you. But K-Man, we saw the yen weaken because of the nomination for Taka. What's her name?
Takaichi.
Thank you very much. That's somebody that's spent many years in Japan and traded on yen desks. Can pronounce that much better than myself. So tell us why that's a big deal.
Because she's basically Abe version 2, if she would get the role of a prime minister. She's already been in the runoff against Ishiba, so she was the other one against Ishiba, where he didn't got the role. But if she gets the premiership, the market may expect that she will reinforce what Abe started, and that means more spending, being against hiking rates, putting more packages in place, etc., etc. And that was the reaction that the yen market had when she confirmed that she was going to be running for the leadership.
No, she obviously didn't beat Ashiba. So I mean, is
No,
that
she didn't
because
beat
she came
Ishiba
in
there, but
second place? Does she
she
come
beat
in
all of
second
them.
place?
Yeah, she didn't beat Ishiba, but now he's not running, so she beat all the rest.
Yeah. Do you think that's what's going to get the dollar yen out of this malaise that you see us in?
Um, yeah, I still think we need to look at the yen crosses, which remain solidly bid on dips, and that is probably the going to take a better direction than dollar yen, perhaps, because I mean, this dollar doesn't seem, apart from corrections, etc., to get too much of a respite. So I would really still view this dollar yen in sticking in the range, but yen crosses remaining supported.
All right, we're seeing the dollar giddy up to the downside, and what a rejection at the 618 retracement, guys. Just again, I'm going to take you back over to the Forex Analytix chat room, and we noted that the dollar basically spiked up post ECB statement to the 98.11 level. Well, we got to 98.10, I think, and basically hit that in a big freaking rejection. Just a huge one. Matter of fact, I do think that oh, I thought Grega was joining us today. He'd blogged about the dollar weakening post CPI as well. But anyway, we've seen this dollar big rejection here, and you can see just the crap got knocked out of it here. Dale, since you've been interviewing Peter this whole time, what's your takeaways from everything you're seeing this morning?
Looking for a new low in the dollar. It might be a third drive, but this might be long lasting. I think that you could, Canada's been the strength, but it's putting in a pretty negative candle here. Aussie may still have some upside, 66.80. And you know what? I'm really going to be watching when the Dixie makes a new low, where the euro is. So, we had this 1780 level that we had diagnosed before it got there, pulled back pretty good. So let's see what the highs are going to be. Maybe you're going to get your 120 on this, but I think for sure they should try and have at least a stop hunt over 1830. So take out all the bears.
I mean, what a
That,
big move from this trend line here. We were just, I'm gonna give a hat tip to Wuju here. Wuju says Euros at support, trend line support that's why I put TL, and I'm like, yep, right there. We were basically on support, and then boom, like a rocket ship right off of that level. Um, so thanks, Dale. Maybe we will see that 120 in the euro. I'm hoping for at least a probe up into the highs. Like even if it's a failure of this wedge, maybe it's a failure of the trend line. You're asking for a lot out of a currency that has moved, so much this year. I'm really hopeful that we're going to see some continued dollar weakness into the FOMC this next week.
yeah.
And then we can look for reversals up there. Speaking of which, gold came in. How are you seeing gold this morning? I mean, because it broke that rising channel, but
Yeah, but
I don't think it's bearish.
as you were saying yesterday, I think a bit of position adjustment ahead of the numbers. But that was a pretty solid jump that we had from where we were trading before. I think in a really, really short term, 35, 85, 90 is a half decent support. But we need to break back above 36 three quarters to continue to go. Yeah, I wouldn't. I'm not really looking unless we break to the top side to get back in. But I'm for the rest, I'm going to try to be a little patient. Overall, apart from whatever the dollar may move here and that inflation, all the reasons for gold to continue to go higher are still valid. I mean, everything geopolitical, central banks, whatever, all those factors are still in play.
Yeah.
But is it maybe just time to consolidate some of it? Because we did put in a very, very good rally since the start of the year, and especially the last month. Um, one step at a time, I'm going to say.
Brian, I'm gonna bring you in here. Stelios is obviously he's not on our show right now, but he's in the chat room. He said, "I honestly think the Fed will do a 50 at this month's meeting." I'm gonna reiterate what I said yesterday and the day before and on the week ahead video, and I hope the Fed gives us a 50 basis point cut. I will absolutely 100%, and I'll see how it all shakes out after the fact. I will hit the bid in the S&P with everything that I got. Well, I don't do all in, but you know what I'm saying. I'll do it with conviction. Let's just put it that way, because if the Fed does cut by 50 basis points, when you just heard Peter Bookvar talk about, now I'm kind of trying to loss of words. Conditions are as loose as they are with stocks as high as they are. That would jar the market. That would actually worry the market that they're seeing something, that the Fed's seeing something that we don't see. And I I would just absolutely hit the bid. Sounds like somebody has some comments to that. Ryan?
No, we were discussing this in the room and on the flow show. What if they went at 50? I don't think they're going to go at 50 because, like you
No.
said, it could imply panic. But then look at the flip side. They could go at 50 and say we're done for the year, and then that's the 2 cuts effectively for the year, which then takes some of the sting out of it. So there's many ways to skin that cat.
Sure.
If it's a dovish 50, like we're cutting 50 and rates are coming down, the speed of which will be determined by the data, something like that, then that is far more dovish and it will be a bit of a shock to the market. And you're right, it will probably be counterintuitive for stocks as they normally are when a central bank eases.
Great point.
So
I'm getting, yeah, just something I noticed. I'm getting some divergence on this probe to 4% on the 10-year. Greg is not here today, right? Because that's right where he thought this move lower in rates would stop. So just keep that in mind.
Yeah, all right. And you've been talking about the TLT move, and shoot, let me go find my yields
Yeah,
here.
TLT, that's a big breakout.
There's definitely some divergence there on a 4-hour. Now let's go take a look at that TLT.
It's not open yet, but yeah, it looks.
Yeah, I mean,
just big breakout.
And we discussed. Oh, this is something that we discussed, I guess, yesterday or the day before about hitting the 38% retracement. And you had said, hey, if we hit the 38% retracement and we reverse here, which you could see pre-market we're trading actually a little higher.
The formation kind of measures up near your 1.27. Based on a measured move of that ascending triangle, would take it to 92, 93. So the last round of highs we had in the spring.
All right. Well, we'll see if that can happen. All right. We are seeing a little bit of a dollar bounce after that initial move, and it looks like the euro might be pegged at this 117 level forever. Just kidding.
Must be some options expiring.
Yeah. Yeah. Ryan, do we have any big expiries happening today?
Not massive. Not huge. Let me check the old sheet though, just to make sure. Give me a second. Where are we?
I'm looking at it right on my screen right here.
Have you?
Yeah, so 117, 1.2 billion.
Yeah, I wouldn't get a bid for that.
Yeah, man, this is just some two-way price action following all the data that we have that has come out. But I do have to say that the euro has put in some pretty good levels to trade against today. I think now that the euro is, pushed those. Now we do have the ECB press conference starting in about 15 minutes. And so that's something to be keeping in mind. What can we expect from that, Ryan, with the ECB presser?
Have we got to go through that? Really?
Yes.
I haven't even put the graphic out, the chart that I put out earlier, the color chart, the tan chart. No, I'm not expecting anything from this, to be honest with you. If I'm not asleep 20 minutes in, that'll be a shock, really. So there's not. What can she say? Oh, yeah, we're going to focus on inflation. Everything's fine at the moment. There's risks here, risks there, but we're not going to do anything for the foreseeable future.
Got it. All right. Well, K-Man, you might have some different color on the ECB press conference coming up.
No, I think
come on, man. I'm looking for some help here.
But I mean, help can also be that she's not going to say anything. This should be one of the most sleepy press conference we had in the past couple of years.
All right.
Honestly,
well,
there is nothing to change. They haven't changed any outlook. They haven't changed anything at all. What is there?
All right.
What is there to say?
Right. Okay. Hey, before we let everybody go, I'm gonna tone things down a little bit, and I just want to say, what happened yesterday in the United States is really sad, and I don't care where you stand politically, but to see a young father, husband, person that stood up for American values, which happened to be freedom of speech, debate, and challenged people, whether you agreed or disagreed. That is the American way. And to see his life taken, like I said, it doesn't matter where you stand in the political spectrum. It was absolutely horrific, and it was a very dark day in American history. And this just happened to be a very young political activist. But things like that shouldn't happen. Violence like that, and there's a string of it. I'm not just pointing out this one event. This one event happened to be very, obviously in everybody's face. But it was pretty dark, and I just wanted to make sure that I said that no one needs to hear how I personally feel about politics, but on this particular instance and what had happened yesterday, it was very, 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 very sad and unfortunate. And I pray for America. Anyway, I just wanted
Yeah,
to
you
make sure I said
better, you
that.
better, buddy, because I think we lit the fuse of this becoming more and more commonplace. There might be retribution against the other party. And I think that you know, maybe this is why the president has been militarizing cities, that there, could be social unrest. Maybe this was the first shot of the Civil War. I'm not optimistic about this being a one-off. So anyway, it's the America we live in now, Blake. It's great to be nostalgic, but I know you don't live in would have, could have, should have land.
No, and
So
I'm a patriot. I'm a combat veteran. I've fought for
yeah,
this country. I am
well,
very much a patriot, and it's sad. And anyway, I hope
anyway, yeah,
I hope we see some leadership in the United States that tries
yeah,
to, to step in front of all this and really show some leadership.
yeah.
That's what I hope happens. Um,
If not move, if not
anyway.
go to Portugal with your father. Anyway, guys, great session today. Was kind of fun mixing it up a little bit on a big number. So always and having Peter preview it. So I thought it was a great session. I want to thank K-Man and thank Ryan and Blake for flexibility of getting, Peter, who's been very loyal to us, has been coming on for, I don't know, must be 6, 7 years already. So uh, appreciate the flexibility and the preparation for our traders, which continues now in the chat room. And you need to be in there and surround yourself with traders better than you. Because as a betting man, I'd say that the crew is better than at least 50% of you hearing my voice right now. So have your level rise, and you have to grow or die as a trader. So that's a wrap. Remember, don't just count your pips, count your blessings. I think it's a blessing to have a company with a heart that cares about traders. Glad to be part of it. Adios. You could be with the team in 25 minutes on the morning edge. And we'll wrap it up for TGIF tomorrow. Thank you, Dream Team. Thank you, everyone, for attending. Good hunting the
Thank
rest
you,
of the
Coach.
day. All right,
Cheers,
guys.
coach.
Thanks,
Cheers,
everybody.
Ryan. I'll see you guys.
Thanks, Coach.
You're welcome, Blake. Thank you. You're welcome, Adam.